FDIC reported that 63 banks, well, they're on the brink of insolvent collapse as they have 517 billion of unrealized losses piled up in just Q1 of 2024. You know what that means? QE is about to explode. Money printer going burr, baby. And you know what that means?
It's over, man. This thing's going to the moon.
That's right. This is massive news. And it looks like the Omega candle that could send Bitcoin to 1 million. Well, it just got a whole hell of a lot closer because J Powell is about to print so much money, it's gonna make your eyes bleed.
Party, that party. Have a good time with G.O.D.
I love how people still blame ties for gas prices and not the fact that we print $1 trillion with nothing behind it every August. This is liberals. This is Donald Trump. Oh, is that what it is? I thought it was 10 in the Federal Reserve with suits, right? Can somebody explain to me why the president just doesn't send the army over there with guns and walk in and be like, yeah, this is over. This is over. We don't owe you any money. You guys can all go yourselves. And it's our currency again. And we say it's worth something. All right? You guys left me on that. What are you all, economists?
Well, that's actually not how it works. What you gotta have is you need a valuable
metal. But what gives gold value? Excellent question. Let's go to the blackboard. That's when you know you're in deep. When you got to take that required economic class and the guy's all excited about it. He literally sounds like he's speaking a different language. You're just like, there's no way I'm going to pass this class, right? I have a better chance of banging the hottest chick in this class than I do of getting any sort of respectable grade.
What an absolute chat. I'm pretty sure Bill is stacking some sets, but let's get into this massive news. Banks' unrealized losses have increased significantly, reaching 517 billion. All these losses stem primarily from their holdings in residential mortgage-backed securities. Well, that's probably nothing. And the federal agency assures that the U.S. banking system isn't in immediate danger. However, it does acknowledge ongoing challenges posed by inflation, volatile stock markets, and geopolitical tensions. These factors could, quote, impact banks' ability to lend, generate profits, and maintain sufficient liquidity. Additionally, specific loan portfolios, such as those for office properties and credit cards, require close monitoring due to potential deterioration. Now, the FDIC says they will continue to supervise these issues along with funding pressures and shrinking profit margins. Guys, we've been covering this, and we've called it long ago. More bank failures are to come. More bank consolidation is coming. And with all this madness, basically you could say clown world, record madness means record money printing. And let's go ahead and take a look at this. If we look here at Bitcoin's price relative to money printing or M2 expansion, can you notice a little correlation there? And this news today isn't some isolated incident. And what happens with interest rates and money printing in the US has catastrophic effects the world over, with the dollar as the world reserve currency. And all the currencies against the dollar, well, they're hyperinflating at an even faster rate. Bitcoiners, we see the problem. The problem is the Fed. The problem is inflation. The problem is stealing the hard-earned time, energy, and wealth of the populace to fund, well, let's put it nicely, an Orwellian nightmare. And you know what? That sounds like a problem for 8 billion people.
The point of Bitcoin is to fix the money, and money is energy, and energy is life. And if I keep sucking the energy out of the economy, I'm sucking the oxygen out of your system. Under the best case, you perform poorly. Under the worst case, I suffocate you to death or freeze you to death. That's why empires collapse. That's why economies collapse. It's not just a problem for an individual. It's not just a problem for a family. It's a problem for every institution. It's a problem for every company. It's a problem for every city, every municipality, every government, every civilization.
Once you go down the rabbit hole, you figure it out. Only Bitcoin can solve this problem. Everyone suffers from the evils brought forth by fiat money, but thank God we have Bitcoin, because this is the alternative, a debt-based scam. Yeah, don't worry about it. It's only 63 more banks. The banks are under pressure in a major way, and a lot of people would say this was possibly orchestrated by the Fed. Regardless of what you may think, you know what I think, guys? I think the legend Hal Finney was right from the very beginning. Bitcoin is going to 10 million and beyond. Strap in. And you know why? Because they're going to print so much sucking money.
They are going to have to print until their eyes bleed. And I think that basically the Fed balance sheet isn't going to be the 9 or 8 or 7 trillion that it's aiming towards right now. It's going to have to go to 20 or 25 if they want to keep this system going. And that's because, they've created kind of this fugoid wave where each swing gets wider and more out of control. I mean, we saw what they printed in 08. I mean, they went from 1 trillion to 3 trillion. It took them 3 years to do that. We saw what they printed in 2020. They went from 3 trillion to 8 trillion. It took them 18 months to do that. Guess what the next round is going to be? They're going to have to print a lot of goddamn money to keep the thing working.
Now that's 517 billion. There was like 2.7 trillion in total unrealized losses with the commercial real estate bubble where it is. But just a reminder, 517 billion in realized losses, that has just hit the US banking system. And the FDIC is warning that 63 lenders are on the brink of insolvency. You need to wake up. An inflation debt-based system is just slavery with extra steps.
Someone's gonna get laid in college.
What will you do about it? Will you be diluted to fund your own prison? No, I say opt out. And so does Prince Philip of Serbia.
My Twitter account, I have a lot of followers who are non-Bitcoiners, who don't really understand Bitcoin. So there's a small minority who are very quite loud and angry, and they get kind of pissed off whenever I tweet anything about Bitcoin. There's probably a lot of bots as well and all that. So I decided to trigger them one day. I am Prince Philip of Serbia or Yugoslavia. I come from the Karađorđević dynasty. That means that Karađorđe was my great-great-great-grandfather who started the first uprising against the Ottoman Empire. We were slaves under the Ottoman Empire for several hundred years. And Karađorđe was a farmer who later became a general who organized first uprising against the Ottomans and liberated Serbia to form what is known as modern Serbia. So he's recognized as a father of modern Serbia. So my tweet went along the lines of this. Karađorđe, in today's world, would undoubtedly be a staunch Bitcoiner. Bitcoin only. He'd mine it, he'd acquire it, enlighten others, and diligently work on expanding the decentralization network of freedom. He would play his part in the uprising against the unjust current debt-based monetary system known as the fiat standard, a system that forces printed money onto its subjects with a supply that is arbitrarily inflated effortlessly by centralized powers, therefore devaluing your hard work and purchasing power at zero cost. Whereas Bitcoin is rules without rulers, an inflation-resistant, absolutely scarce, immutable, censorship-resistant, decentralized, indestructible, portable, and divisible freedom protocol based on truth. Inflation and the debt-based fiat system is modern slavery. Karađorđe would see Bitcoin as the key to a peaceful liberation from a monetary oppression. Bitcoin is jebana. Now, jebana is slang for gunpowder and lead, and Karađorđe was always saying, we need more jebana for the uprising.
Many are waking up to this fact, and what happens to Bitcoin's price when the masses seek to protect their wealth from the invisible tax of inflation? Before we break that down, let's take a minute to recognize our sponsors, the Bitcoin Way. Taking self-custody of your Bitcoin, that is the revolution, and the Bitcoin Way is your #1 stop to learn how to Bitcoin. Simply Bitcoin Originals are powered by the Bitcoin Way. They've got 25 years of experience in cybersecurity. They are your IT team in the Bitcoin world. Whether you're just getting started setting up your first Bitcoin wallet or node, or you're looking into UTXO management, multi-sig security, inheritance planning, or accepting Bitcoin payments, cybersecurity, Bitcoin security, they have you covered. Time to go from the why Bitcoin to how Bitcoin, and the Bitcoin Way will hold your hand and guide you through every step of the process. All right, here we go. Strap in, folks, because 7-figure Bitcoin, well, it's in play.
Because Bitcoin supply is finite and decreasing over time, I think there is a multiplier effect. There's probably $10-20 billion of capital that's going to flood in right away. That's going to go into this small supply of available Bitcoin, maybe 1 to 2 million BTC. That is really what drives that multiplier effect, because it's not that you're going to buy $1 of Bitcoin and the market cap goes up $1. Because of that limited supply and because of that rapid injection of capital, you have a multiplier effect. And that multiplier effect, I've seen numbers thrown out there somewhere between 2 to 3 times, 10, 50, 100. And if you factor in the Bitcoin multiplier, then Bitcoin can jump to $1 million very quickly.
Hey, Samson's not alone either. You better check out this bullish action, and don't forget to like, subscribe, subscribe, set those notifications, give us a pap, follow Simply on Twitter for all the latest breaking Bitcoin news, and don't miss the #1 live Bitcoin-only news show on YouTube, Simply Bitcoin Live. Coming at you Monday through Friday at 12:15 Eastern Standard Time. I hope you guys like this one. I'll catch you next time. Peace.
If you prefer to go down with the ship, fuck you.